Hello there. Welcome back to Grade 10 Accounting. This video, we want to look at the question paper of March 2022. And this is a common test. So we are going to look at a common test from the province of KwaZulu-Natal. So going to our question, you see that we are going to look at question 1, which is on the analysis of transactions. And our question is got 29 marks. And I request you to spend provided with information relating to Baxter Traders, a business owned by Abusi Gumi for the following transactions according to the columns provided. Assume that the bank balance is favorable at all times. So basically, we are given an example on which on how to present your question in your answer book, whereby it reads charge our data in each gamma to 2 runs. It on the effect in terms of our double entry, in terms of each gamma is a data. Remember, the data is an asset. So the data's control has got a normal identity balance. So we are supposed to debit data's control. And then the amount we're having is 52, which is the, and then the effect of the accounting question, data is an asset, and whenever it's debited, it's a plus. And then it's an income. So it's supposed to increase the figure for our net profit. So basically, income increases orders equity. So we have a plus again there. So that's how we're going to present it to answer book. So on the first transaction that I given in the question, it reads paid for telephone via EFT number 235 to Telkom for 950 rands. 450 rands is for the owner's son. Owner's son self-work contract. So we've got 2 entries. So you see the question is emphasized that there are 2 entries that are involved. So on the first entry that we have, we see that out of 950, we have 450 this for the for owner's son. This is for personal use. So obviously this becomes our drawings. So we have got drawings here. So the first double entry is our, which is indicating our drawing. So the first double entry you're going to debit. Remember, drawings are always debited, so we have to debit drawings and credit bank. Remember, these drawings are being made by through bank, so it is that way. The second double entry that we have is on the remaining balance, which is 950 minus 450, and you're going to get your 500. So it's double entry on this 500, which is now on telephone. Remember, telephone is an expense. So the double entry consent there, we are going to debit telephone, and then we credit bank. Remember, it's a payment that is being made through EFT, which is through the bank. So basically, that's the second double entry that we have. So we are going to summarize our double entry for telephone and bank. Go to our answer section. See that this is our answer section. So obviously, on the first double entry, we said we are going to debit our telephone, and this is the double entry that we are trying to enter in, and then we credit bank. So account credited, we are saying bank. Right. So the amount, remember, if you refer back, you see that in terms of debiting telephone and credit bank, we have 500 that we have calculated here. So we are going to put our 500. And then I said it's an expense, the net profit figure, and also expense reduced. Remember, telephone is an expense, so we say we put a minus of other equity. So by crediting bank, remember this is an asset, and whenever we credit an asset account, which for this instance, with the bank account, we are supposed to show as a negative. So basically, we can just give a summary in terms of how we should treat our asset account. So an asset account, we are saying, for example, this is an asset account. So bank is an asset account again. So whenever you debit, you have ever credit, you show it as a negative. So as simple as that. So that's exactly how we are presenting it in our answer section, whereby we are saying we are crediting bank as an asset, so we are supposed to show it as a negative. So that's what we have. And then we go to the next part of our question. Remember, we also have the second double entry that we have here, that we are supposed to debit drawings and credit bank. So we have bank pre-entered, so we're just going to put our drawings on the debit side. So the amount consent, remember, our drawings are referring to our 450. So we come back and we try to see what is the effect of the accounting question. But we start with our drawings. Remember, drawings reduce owner's equity, so obviously it's going to be a minus. And the bank is an asset. So we said when they're crediting an asset, it's a minus again on assets, so we put a minus. So that's how we're going to adjust that one. And we now go to the next part of our question. whereby we are going to information 2. According to the information that we are now on information 2, which reads received an EFT from a tenant B Parker for the monthly rent at 3,000. So basically we are receiving, so means we are receiving through EFT. So obviously we have bank account, we have bank account there. And obviously, by using our bank, we also try to identify the other account that we have there. So basically, we're saying this is our bank, and then you see that this is rent. So obviously, this is going to be our rent income since we are receiving. So we say also a rent income. So in terms of which one do we debit, which was the credit, remember whenever there is an income, we are supposed to credit. So obviously, we have credit on our rent income is an income, and we are saying income with credit. Then we also see that we are receiving funds. Obviously, we are receiving money, so obviously bank is going to be debited. So the corresponding entry is a debit on bank. So the amount is 3,000. So we can just go to the answer section and enter it as such, whereby we are now saying we have got bank already pre-entered on the debit side, and the credit side we are saying it's rent income. So this is what we have. Then we try to see in terms of effect of the accounting question. Bank is an asset, and whenever we are debiting an asset, remember I said when we are debiting an asset, we are supposed to show as a positive. But now coming in, we say positive on the asset. And the rent income, it affects it adjusts the figure for our net profit. Obviously, it increases. Remember, income is added, so it increases our net profit, and our net profit also increases, and owner's equity, so be a plus. So we have a plus here, owner's equity. So that's what we have on transaction 2. When you go to transaction 3, whereby it reads goods sold on credit to C. Moroshpa for 8,000 rands, cost price 5,800 rands. So we are also given a hint that we are supposed to make some 2 entries. So from there, we can now be able to see. So we are going to make an entry using the selling price. Also, we also have the cost price. So basically, we are saying this is the selling price, and this is the cost price. So double entry on the sale price. These are sales that is taken place on sales, and also it's on credit. So also we've got data control. So yes, first one is a data. So obviously we're also going to have data's control. So we know that our sales is always credited. So obviously we're saying we are crediting sales. Data control is an asset. We are supposed to debit. When we are sell goods or credit, obviously we're creating a data. So we're supposed to debit our data control. So we can debit here. So this is our double entry. And this is the double entry using our sale price, which is 8,000. Then double entry now using the cost price. Remember, we have cost price. We're going to have cost of sales and trading stock. So obviously, say cost of sales. Remember, the goods that are being sold are part of our trading stock. So we need to remove them from our books. So we also have trading stock. So in this essence, when they are selling, it means goods are moving out of the business. So they are moving out of the trading stock. So obviously, trading stock sell assets after when we buy the goods, we debit trading stock. So when they are selling, we credit trading stock. So obviously, here we're saying credit, and the cost of sales is an expense. So obviously, we debit. And this is the double entry that we are using the cost price, which is 5,800. So go to answer section and summarize it as such, whereby we are saying let's start with the double entry selling price, whereby we are debiting debtors control. You see that our 8,000 is the selling price value. So we're saying debit debtors control, and then so this is what we have. Then I will try to see the effect on the accounting question. So by debiting debtors control, we are debiting an asset. Debtors control is an asset. And remember, when we are debiting an asset, it's a plus. So we go there, we show a plus on assets. Then sales is going to affect our net profit. So sales increases net profit, and net profit will increase our owner's equity. So basically, we are saying sales it's a plus on owner's equity. So we're having a plus again bonus equity. So this is what we have on the selling price. So remember, we also have the cost price double entry, whereby we're going to debit cost of sales and credit trading stock. So basically, we are saying we're debiting our cost of sales, and then we credit our trading stock. And we are saying cost of sales it comes as an expense, it reduces net profit, and our net profit also reduces our owner's equity. So cost of sales is a minus of owner's equity. And trading stock is an asset, and whenever we are crediting an asset, it's a minus. So uh, we are going to where assets and so it is a negative. So that's what we have on our transaction 3. And now we can try to go to the last part where we have transaction 4. So on transaction 4, it reads the loan 11,500 rands. And then 1,500 rands was for the interest on the loan for the month of February 2022. Two entries again. So we have the two double entries that we have to come up with. So first of all, we are supposed to do the double entry of the loan repayment and then do the double entry for interest. So for loan repayment, remember the total amount is 11,500, but inside 11,500, there is 1,500 for interest. So to find the loan repayment, we're going to say 11,500 minus 1,500. We find 10,000 is the loan repayment. So when you done that now, this first double entry, we are going to debit. The first double entry, we are going to debit our loan. Remember, at first, when we access the loan, let's say this is our loan account. When you access the loan, we credited. Now, when we are making a repayment, we go to the opposite debit side and end it. So when our loan, uh, when our loan account is one debit. So DR means debit, then CR means credit. So the one that you are crediting using this 10,000 for the loan repayment, obviously it's going to be bank because we are paying the money through bank. So we are saying this is the double entry on 10,000, which is the loan repayment. When you go to the second double entry, whereby we are going to make the double entry using the interest, it is like 1,500. So on interest, obviously interest on loan is an expense, so you're supposed to debit interest on loan. And then we are supposed to credit our bank. And you see that this is the double entry now using the interest amount, which is 1,500. So this is exactly what I'm going to summarize in our answer section. So we start with the loan amount 10,000, whereby we are saying we are debiting loan and we are crediting bank with 10,000. So loan is a liability. So you see that again, if you come here, if in our liability, all liability accounts, we should take note, liability account. Whenever we credit, we show it as a plus. Whenever we debit a liability account, it's a negative. So it's a negative on the accounting measure. So we go back there and we see that loan as a liability is debited, and we are saying when debit a liability is a minus. So we need to show a minus on liability. We put a liability in this column minus, and then we are crediting bank as an asset, and when crediting bank, when credit bank as an asset, it's a minus again. So I'll go there, we'll show a minus on the assets. So that's what we get. Then we do this second double entry, where we are debiting interest on loan and crediting bank. So down here, we are saying we're debiting interest on loan, interest on loan, and then we are crediting bank. And then we are crediting our bank. So obviously, we are saying the amounts. Remember, we can just compare back. We have 1,500. So yeah, the amount that we are having is 1,500. Then interest on loan is an expense. So all expenses reduce owner's equity. So it's a minus of owner's equity. The bank is an asset. We're crediting bank, so the asset is a minus. So this is what we have. So I think this transaction we are just supposed to enter it in this row, but it's just the same. So this is what we have. So we can just ignore this. This is what we have, guys. According to this video on the analysis of transactions. So we have looked at the effects of double entry on the accounting equation. which is very, very important. Let's stay tuned for more videos to come. Thank you for listening. Remember, all typical examination questions will be uploaded on this channel. So let's get notified. Let's subscribe and share. Let's turn on the notification button so that when I upload the new videos, you get notified. So as for this video, I'm signing out. We'll meet again in the next video.